excited to be able to invite a really esteemed panelist across sort of different life stages, different tenure, and they're all sort of really established in their field. So maybe we can go from this side.
Hi everyone, my name is Tasha. I'm a portfolio manager at Fidelity. I manage primarily thematic growth strategies. Outside of office, I'm a mother of a young child. I like to play poker on weekends. I wrote a book recently called Technomics You Should Know, which to my pleasant surprise became a bestseller on Amazon.com in this category. So very happy to be here.
Thanks, Tasha. Hello everyone, my name is Brenda Howe. I actually work for CFA Institutes. I'm leading the teams in the Asia Pacific on growth and also in terms of developing client solutions. So for those you might know CFA and might not know CFA, probably this is the name for the Chartered Financial Analyst. And so it's very relevant to today. So basically I work with lots of partners and societies in the regions to not just to promote our destination, but also a suite of products to enhance financial literacy and also empower people to invest with professional ethics and standards as well. So I'm very happy to be here today. So I'm looking forward to more conversations.
Thank you, Brenda. Hi, I'm Yvonne from Ant Bank. So one of the 8 virtual banks in Hong Kong under the Ant Group, and I'm the only female CEO among the 8 VBs, so I think it means something. And well, I've been joining Ant Group for 4.5 years already, and before that I was with Hang Seng Bank, the HSBC Group, the subsidiary of HSBC, and I've been there for 17 years. So it's kind of a big change for me from moving from a traditional bank to fintech landscape. So I hope that tonight we can do more sharing on that. Thank you.
Last but not the least, Daisy.
Thank you. Daisy Ho from HSBC Asset Management. I joined HSBC for 2 years. Before that, I was with Fidelity for over 17 years. So my whole career life is with the finance sector. Unfortunately, very boring sector. I'm really excited to see a lot of ladies tonight. Of course, including the male allies as well. So really look forward to our dialogue and have fun together tonight. Thank you.
Thank you. So I feel like we've been doing a lot of talking, and I felt like maybe we'll do a warm-up exercise with audience. I thought about doing Slido, but maybe it's easier to do the old-fashioned way of a photo hands. So since today's session is about sort of personal investing for female investors, my first question to all of you is, when did you start investing? We have 4 answers. Do we have any early boomers who started investing in college? I see one. Don't be shy. Okay, another one? Okay. What about in their 20s or 30s? So that's me, when I got my first bonus, first paycheck. Okay. Anyone beyond that, 30s and 40s? Okay. Anyone not investing, everything in fixed deposit? Anyone? No? Okay, we're doing pretty well. Okay, second question. For most of us, seems like we started investing in our 20s and probably have been investing for a while. Would you consider yourself a savvy investor? Any raise of hands? I think we have a portfolio manager sitting next to me, I should be seeing a hand. Okay. All right, so we're all here because we all feel like we can learn and be a better investor. Okay, so that set the stage. I think for tonight's session, we want to keep it kind of informal because now I've sort of joined Endowus for 2 years and I've been sort of entered this asset wealth management industry for about 7 years. I've realized that investing is actually something very personal. It's your personal journey. So I felt like today we invited different guest speakers to really understand sort of each of their journeys. Maybe some of their journeys will resonate more because each of us have different personas and we can sort of learn from each other's journey and see how we can help each other. Because I think it's something that I really learned over the years. I think when I first started investing in your 20s and 30s, and I grew up in Hong Kong, you felt like there's just one best stock tip that you need to look for. But I've realized that everyone is very different. The one investment that's really sort of suitable for someone might not be suitable for me. For people who are very risky, maybe 5-10 years ago they have all in on cryptocurrencies, then they're doing very well, but you would have a crazy ride. So it's really different for everyone. So to kickstart the first question, maybe we'll start from Daisy the other way around. Maybe you could share sort of when did you start investing? What was your first investment, if you still remember? What was the outcome? And over the years, how has your investing philosophy changed? Any particular incident or person that really influenced you?
Okay, so depending on how we define investment, right? So I remember when I was a kid, I was brought up in Hong Kong, right? So we have the Standard Chartered Bank and HSBC. They offer the kids like savings account. I remember the Lion, and then the other one is like Disney, Mickey Mouse, something piggy banks. So if we define deposit as investment, I think I started when I was really, really young, maybe like 6-7 years old. And then I still remember back then open 2 accounts and then getting the concept of interest rate. And then I tried to arbitrage, which bank had slightly higher interest rate.
Oh, when you were 6, okay.
Really young, yes. So that I think is like getting the habit of like regular savings. To be honest, I think that is like very important when it comes to investing. Right nowadays we understand regular savings. I have to weather the volatility, and then like this is a very good like discipline. So thanks to my parents, be able to give me this like value in my like childhood. The other thing I think for investment in Hong Kong, like you said, right, stop like the tip of like the month or the day, and the other things I think is more our parents' generation. They talked about 2 things in Hong Kong: buy a house, property. Second is buy HSBC, the coupon. So this is the concept, right? So but then of course things evolve, and I myself, right, like buying HSBC, buying property, like having all this like issue. I remember like really like upset with like financial crisis where I bought a house like for myself, right? Like, then you have financial crisis, you're becoming negative equity. The pressure for my first time in my whole life, right? The biggest investment. Think about the leveraging effect because of mortgage. So that is something that I learned, how to diversify and how not to like just rely on one asset class. So that is one incident I remember vividly still now, right? That's like a big scar in terms of like how I invest.
Okay, diversification.
I started it when in my 20s after I graduated and had my first job. The only reason I started investing or savings is because I don't want to spend all my money, all my salary in food, wine, luxury products, fashion, handbags. That's the only reason why I think that, oh, maybe I need to save a little bit. Then where to keep the money, right? So I started from some very like conservative product. I started from like putting money in those like savings plan, monthly saving. I put it in the stock, like kind of like monthly subscription of HSBC, of course. Well, and then I didn't really have the concept when to sell it. I just keep like do the monthly subscription. So I accumulate quite a bit, but then like you know what happened after, right? The stock price like 30 something, right? So yeah, and then I lost quite a bit. But anyways, I thought that from my philosophy, as long as I don't spend all of it, it's already a gain. So it's good that we could have some regular savings. I mean, the habit is very important.
Then I think I started my 20s, actually really similar to what Yvonne mentioned. I really saved money when I was a kid, but actually when I really start to invest is only when I have a paycheck to have money to spend beyond what I want. So, but actually at the early stage of my career, actually I started my career in the bank as well. So I'm pretty much influenced by the environment. So in my peer, so lucky enough that there's no crypto at that time. So, so I was influenced by the environment that was looked and loved by bank officer or manager or even like the senior executive. They had take advantage of the low interest rate for mortgage. So, and I was surrounded by a lot of my senior managers and telling me that you should buy a flat, you should buy a flat, and because the interest rate is so low. So at my age, the interest rate for mortgage outside, if you're not in the bank, is very expensive, it's very high. So I said like, so the ways to really to invest money is to buy a flat. It's just as simple as that. I don't even think about whether I can afford that. But lucky enough at that age, I still can afford to buy a flat with the support of my a little bit of saving. So so it was my first investment is to have a mortgage with the bank. So I spent a little bit of my time to understand, how to do a mortgage, and then I get it done. So also lucky enough that because it's a mortgage, and every one of us believe that our parents also teach us to buy, the properties in markets in Hong Kong is actually quite a safe investment. So after a few years, I feel like I'm very happy with a very small gain because I'm still very young. So a 10% gain said like, yes, I'm going to cash out. So I sold that, and then what happened when you have cash, you can't go and sort of invest in the stock market, and the return on investment is much more high risk then. So a bit of those the key learning for me is actually it's not to hesitate in investing, but also to really be able to find the right people to talk to in investing. But do have lessons learned in my investing experiences. I think from my perspective, if you really treasure friendship, don't jointly invest with your friend. And I can see the laughter. Probably some of you might have similar experience because when I was actually at my early 30, I've got friends and they really feel like let's do let's venture some like startup, and we don't even having crowdfunding at that time, so they just ask you, do you have capital? We put the fundings together, let's invest in a startup. And just because of friendship, I feel like I need to support them and actually put a little bit of my savings to support them. And of course in a startup, there's always been risk. So I think I learned from that because I believe that, I really believe I want the friendship more than the money. So I decided to let go of those. But the lessons learned are that investments needs to be made by your own judgments rather than a friendship.
Thank you. I realize everyone grew up in Hong Kong, which became just natural savvy investor by birth from being from a financial center. My first investments were in my late 20s. It was 10-cent stock. The pitch was from a friend who's an equity hedge fund manager. He said, "This is the best stock. It goes up 1% every day." So I bought it, and it did that for quite some time until it stopped doing that. The key takeaway is that nothing goes up in a straight line. Even the best company may not necessarily always be the best investment.
Thanks for the sharing. I think inspired by everyone's sharing, I can't help but to also share because I resonate with a lot of the stories. So my parents also, I actually remember it was a Hang Seng Kids saving account, and mine I think was like a Hello Kitty kind of book, and I chose it because I really like the Hello Kitty. I wasn't as savvy as Stacey. I didn't look at the interest rate, but whatever offered like the cutest sort of like and then I went for it. But I think for those of you, some of you guys know me, so I actually started my career in investment banking. I studied finance, but interestingly, you went to business school, they actually do not teach you anything about personal investing. You take all these classes on accounting, on corporate finance, but nothing on personal investing. So I remember my first investment because for those of you guys started investment banking, I know you went through training the street, you like learn how to build a DCF. I downloaded some 10Ks and I started building DCF on like companies that I thought were like interesting companies, and I made my investment decisions on the DCF model. But it was a massive disaster because as we know, right, that was sort of historical information. I was working as a busy investment banking monkey, didn't have time to sort of follow up on what's been happening on the companies to update my model, and it was a disaster. But I think probably from the stories we've heard from others, and also from my personal journey, you probably have to sort of have your first taste of your first loss to really kind of graduate and okay, finally I've learned my lesson. And sometimes when I meet sort of younger clients, I actually do encourage them to try out different things, because you have to try out different things to realize what exactly it's right for you. And now I've worked in this industry for a few years. It's quite interesting that all of us have gone through a risk questionnaire, right, when you buy investment products. And at Endowus, obviously, you have to do that. And in my previous job, we've looked at data. A lot of us, when we fill out the questionnaire, we might think, oh, we are very aggressive, like 30% drawdown, I can handle it. But we've seen, especially in digital platform, it's quite easy for us to see. When you actually have that 30% drawdown, actually not even 30%, 10% drawdown, those aggressive investors immediately panic and then start calling and say, what's happening? So sometimes we actually might not know ourselves as much as we think. So it's going through this experience to really understand what exactly is your risk tolerance, what exactly is kind of the drawdown you can really tolerate to sort of curate what I mentioned, the right portfolio for you. So I'll stop with that because I shouldn't be holding the mic. The next question I have is, we talked about, okay, how did you start your investment journey? Do the way you approach wealth kind of differ or changes as you live through different life stages? I think Taosha mentioned recently became a mother. Maybe I'll start with you. Has sort of the way you approach wealth and investing changed after sort of your family expanded?
Yes. Yes. I'm a little bit of a counterintuitive case in the sense that I was actually more risk averse when I was younger than I am now. And sometimes I wonder why. And I came up with this mathematic formula: is that your risk tolerance is a product of your pain threshold times your confidence, your conviction, your investor's confidence. So in the sense that if you're like emotionally very drawn to risk, then naturally you will take more risk. But also if you're more confident in your ability to pick the best investments, then you will take more risk. But if you're not so sure, that you're extremely scared of losing any money, then you will have a low risk tolerance. I think that's exactly what was happening to me when I was younger, in my 20s. I was new to Hong Kong, and the city had so much to offer, new handbags and everything. If you tell me that, if I invest this thing and I could lose 20K Hong Kong dollar, that's a handbag to me. Just emotionally, I didn't have that, I didn't have that pain threshold for me to I don't want to lose any single dollar. So that was one thing. And then on the other side, the confidence. I wasn't incredibly confident with my ability to pick the winner until my friend pitched me the Tencent stock. So I think that was sort of caused me to have a lower risk tolerance earlier. But as I grew as an investor, I started to do this as a full-time job at a large platform. I started gaining more confidence in the way I invest. I also started to rationally think about risk budgets. You don't mix what you have, your investment account with, you don't convert that in your mind into a thing that you could buy, because that is the way to get emotionally entangled with the investment money. So with that, I think over time I've become more comfortable taking risk. So that's my journey.
Okay, maybe Brenda, anything to add on this?
Yeah, so journey is very different, obviously, by the age. So I actually felt when I was young, the purpose of my investment it's very different from now. So that I actually, when I was young, I was looking for investments to fulfill my own lifestyle, so to speak. Just like I want to buy a flat, probably I want to even get a car, and I want to create a wealth that can fulfill my lifestyle, so that I'm pursuing on. And I feel like this is really my dream at that time. So as I evolved, getting older, and also like more, feeling the longer term about my retirement, and also how to, extend to the next generation. Of course, I'm thinking a little bit more longer term beyond just the lifestyle. So Probably also because I feel like my retirement is getting closer as well. So I feel I want to save up more for me to ensure sustainable in terms of my well-being and also my family. So the whole consideration changed a lot in terms of how I invest as well. So similar to like the risk taking, though I do obviously feel like I'm tending to be more conservative in allocating my portfolio. And I like the ideas about diversification. This is very close to my heart, and even I like to invest in stocks like everyone's in Hong Kong. And so, but also I feel like the stock market has been very, very volatile. Everyone's experiencing it over these years. And obviously I was not, devoting everything into one basket. But the diversification allows me to feel much more stable in terms of generating ongoing, revenues or, investment return. So this is obviously a bit of change in terms of the mindset and also like the purpose of investment as well.
So I think diversification is something that's quite close to heart for a lot of us. We talked about for the longest time, I was also raised in Hong Kong. We were just brought up buy a flat if you have spare money and buy HSBC, and we know those are very correlated, right? You should look for uncorrelated returns, and I think at Endowus we continuously tell clients you should diversify. And I always said to my team, if we started our business 5 years ago during bull market, people would not listen to us because you can just buy Tesla, you can just buy any PAT stock, they just go up, right? But I think the past 2 years, the volatility in the market, especially close to Hong Kong, China, has been sort of underperforming relatively. I think a lot of our clients and friends and family realize the importance of diversification, not just markets. I think Daisy reminded us, different asset classes as well. And I think Taoxia reminded me, you can have alternatives. I think one of my best investment was my first Chanel bag that went out multiple times with my first bonus. So you can think about as allocation of different asset classes as well. So moving on, I think the next question is, we have some male allies here. I think there is this stigma or a stereotype that female investors are more risk averse. I wanted to pose a question to Daisy and Taoxia. Daisy, you've been working in the industry for so long. You sort of have been in touch with both male and female PMs. Do you really see there's this big difference between how male and female investors sort of invest? And is this a common conception? Do you think females are actually better investors?
Okay, so before I touch upon the portfolio manager's question, we looked at a lot of our own client data, right? We are not generalizing here. Actually, a lot of data suggesting to us that male definitely far more aggressive than female when it comes to investing. I think this is come down to our confidence level, the conviction, and then our DNA being more conservative. Second characteristic that we can see from the women when it comes to investing, decision making is longer than guys, right? Guys normally is very quick decision. And then the third element is women tend to wanting to talk to people, get help, support, consultation, whether go to financial advisor, to your friends or husband. For guys, it's not, it's quite personal. And then I'm not saying a lot of guys are punters, right? But in a way they're more speculative than women. So this is very common, not just in Hong Kong, but across in Asia, globally, the data that we have seen. So to a certain extent, I think it comes back to finance is quite intimidating to women because of the subject itself. And there's a lot of myth about it's all about guys dominated industry and all that. So that's why a lot of women we tend to shy away from investing. So this is the data that we be able to see. So I think for us, actually this is not a bad thing. Think about, especially for your retirement planning, right? If you stay long term, if you don't make a lot of time to the market switch, actually that's not a bad thing, provided you have a very diversified portfolio. The only thing that I would remind is a lot of us is if we invest too conservatively, then that is not good enough for your retirement. Think about we have longer longevity than guys. So we have a very long life to live. So we need to think about that. So for me, if I look at portfolio managers, men and women, this is very hard to generalize or stereotype. because like different asset classes, they are trained differently. I'm going a little bit technical here. For example, for equity portfolio managers, they look at upside, earnings, growth, right? For fixed income portfolio managers, they're trained to look at all the risks. Because for bond, you buy it, like go back to your principal, right? And then they just look at downside. So it's the upbringing, right, in their career already looking at different angles, right? Growth versus like downside risk. So it's very hard to just say women and men, but I would say that if we have more women, then we have a better team, right? I'm sure like a lot of female like portfolio managers be able to tell us that then you have more diverse view in the room, and then you have more perspective. And women tend to look at things that like guys sometimes like not looking into. There's a little bit of stereotype there, but I think it's also very hard to generalize. But then I think after all, if we be able to have more balanced gender in whether it's portfolio management team to any businesses, that would be better outcome for us.
Okay, I have to pose the question to our female PM here. And I think, Tasha, you've been a fixed income investor and now a multi-asset investor. So do you agree with what Daisy kind of mentioned? Maybe because you're more risk averse, you started as a typical fixed income investor and now sort of gives you a more balanced view as a multi-asset manager.
Yeah, no, I think that the training definitely very different. As fixed income guys, your capital preservation is so important to you, whereas equity, you chase that, you shoot the lights out. I've been on both sides. Really hard to generalize. Yeah, I think it's you're just measured against different metrics. But I've been with Simco for a long time as well, and I came to Fidelity. One good thing I would say is that Fidelity is a lot more balanced in terms of the gender profile. And I think that diversity on the trade floor is, I think personally it was heartwarming. On my first day of work, somebody took me around trade floor on Fidelity. I'm just so shocked to see so many female PMs, so portfolio managers, because it wasn't like that in a different, in a lot of the trade floors actually. So I think that is, for females to take risk, I think find your own crowd is a great place to start with, whether you're a personal investor or you're professional investors.
Okay, thanks, Tasha. So I think the conclusion is we should have sort of gender balance, sort of both sides. There are sort of pros and cons. We can complement each other. And I think this is an on-the-spot question. I think Yvonne, you reminded us you're the only female CE among all the virtual banks. Do you have any perspectives when you sort of interact with your other peers? What do you think, is there any particular difference sort of as a senior executive, as a female leader versus sort of your male Ps, and sort of what are your tips? And obviously we've seen the numbers that you're the only one. There must be obstacle, right, for female to be able to attain the role. What are your tips? Like how do you manage to sort of get to where you are?
Well, I think like fundamentally, men are more like knowledgeable in terms of technology and tech development. I mean, like to me, I'm not a tech person. I'm not a computer background person, and I'm not a digital background person. But normally, it's more a male-dominant landscape. But I think in every company or in every business, we need, as said, we need a diversified, collective effort to put things together. And I think female do have, even though I don't have the digital background, I don't have the computer background, I don't have the coding background, but I have the ability to talk to people and communicate. I think one of the things that female leaders always, or female always like easier in the workplace is we don't feel bad when we need to raise our hands and seek for help. And I think that's very important because like particularly in the fintech landscape, particularly in the startup, in a virtual bank, we experience something that we never experienced before. We try to make something out of it. So the whole journey is just like getting people together, getting people to contribute their part, and then I try to bring things together and make it happen. So I think it's always important that I need to tell people that I don't know how to do it. Can you help, or can someone help me? I think that's one of the quality in today's environment, that we need to embrace change. But one of the key element that we need to have, or the quality that we need to have, is we need to tell people that you need help, or you're willing to seek for help. So I think that's probably the a female will be easier in the workplace, probably. Yeah, we're not that, yeah.
I think reminds me of what Daisy mentioned. Going back to investing, and on our platform in Endowus, we do see the same thing. Daisy mentioned that female investors, they tend to more willing to learn, to do our homework. For example, the event today, we had to close off registrations because never have we had an event a week before we're completely out of capacity. I think that shows a lot that female investors are actually really interested to learn more. And kind of what Brenda is saying, I think, do your independent research. We probably all have heard or sort of acted upon some stock tip we heard somewhere and regret it. But I think this is why in Endowus we're actually very excited to be hosting a lot of these events, content, and a lot of these even webinars, because we think, again, as I mentioned, investing is something very personal, and you can sort of do your own research, especially, and I'll sort of, my last question will touch on this. With technology, it just makes it very easy for all of us to get channels to be able to sort of gain the knowledge, right? I think we all are very busy working professionals. Back in the day, by the time you get off work, that's the last thing you want to do, right? But I think now with the web, with your phone, you can just every night sort of spend a few minutes, read up on an article, watch some short clips to really find out what's the right plan for you. Because what Daisy's saying, like we female, our sort of longevity means we really need to think about how do we make sure we have enough money to sustain our spending habits, make sure we still have money for the next handbag.
I thought that's an excellent point. I think again, you want to build that confidence and conviction in order to overcome, maybe, possibly, not necessarily, more sensitive to the pain associated with losing money. So again, going back to the mathematical formula, if you want to prompt yourself to take a little bit more risk and be a little bit leaning into a more aggressive style or of investing, do more homework. I'm a professional investor who's paid to take risk, and how do I bring myself to take that level of risk? I do a lot of homework. I do so much homework that I know I'm more confident about this trade than I'm precise. I think it's the lesson is probably the same with individual investors. Do your homework, you will feel more confident, and you'll be able to do what you need to do.
Okay, thanks Tasha for kicking off our final question, because we're coming on time. So I think we wanted to wrap up with sort of 1 to 2 tips the panelists can share with the crowd before we move to Q&A. I think Tasha's tip is do your homework. Probably not as much as sort of a portfolio manager, but do your homework. Brenda, do you have any tips for all of us?
Definitely do the homework, but before you do the homework, you need to educate yourself. So I think I'm very passionate.
Take the CFA exam.
Exactly. So actually before that, I think that everyone sit for the state exam, but I do believe that we do offer some online educations like the Investment Foundation. I believe that when you really want to do research, sometimes you feel like you don't understand the terms. Even I think like invest in bonds. What exactly is bonds? So I don't really want people feel like you're embarrassed by not understanding this terminology, because it's so finance related. So as Yvonne mentioned, we are very good at asking questions, seeking help, but actually sometimes building up your own knowledge is very important. And I do believe that females are very, very keen in learning and continuous improvement. So I do feel educate yourself, acquire some of the fundamental knowledge before you invest.
My advice is don't be shy, seek for consultation.
And Endowus is here to help you if you want consultation.
So I kind of agree more with all the ladies, right? Talking about one thing that I just want to say, we work very hard to earn the money. Why let the money just, right? Like in the deposit or wherever, right? Why don't we get the money working very hard for us? So I think worth the effort. When it comes to digital or the technology, something that our data also telling us, this is very interesting. They said, the data telling us that actually women tend not to use digital tools as much as guys. I think guys in this space is much smarter than us, right? They know how to use the tools, whether on the web or apps, to be able to help them to make the investment decision. I think maybe start with watching some video clips, like you said, right? To start thinking about what is investment. Because if you don't engage yourself, nobody will be able to do the job for you. As you said, right, this is very personal. You really have to get your hands dirty, be able to make your money work for you.
Thank you. My small plug, if you go up on Endowus, we have a plethora of education content videos, and as I mentioned, you can also seek out for advisors. But with that, thank you for the sharing from the panelists. I'll open up for Q&A to see if anyone has any questions for our panelists here. All right, Vivian.
I mean, it's very heartwarming that, females nowadays, or especially professionals, are so into investment and so on and so forth. I just wonder whether actually in your family, whether you are the person who is actually, the decision maker in investing the nest egg of the family, or you do it, together with your partner, or you do it separately, because, I came from, private wealth, and it seems that, a lot of times, the investment manager thinks that the guy makes the decision. In fact, it's always the wife. So I just wonder whether, you guys also, sort of control the finances.
Okay, portfolio manager.
I do. Just because everything has to go through my compliance out of necessity.
Yeah, I think that is very true, right? Actually, a lot of wealth sits at a woman's hand, which is shying away from telling people. For my personal situation, you know what? Whether it's girls gathering or family or family gatherings, all the time asking me which fund house, what fund, what that we should invest in. That because of my personal situation, but we look at the data. I think it resonates with me where women are in control of the wealth. Especially we have longer longevity. Think about it.
Actually, I do make the decisions. I'm the decision making just because of my education is more on this background as well. So, but yeah, I think it is a family. Probably a co-decision making would be better. I think, but I think with the respect of the knowledge behind, so you should have the ones to make the decision.
Well, I make the decision, but why? I'm not too sure why. Just because I handle the household thing more, maybe. Yeah, kind of.
I've also increasingly come across cases where it's a joint decision for the family account, but then the husband is referring the other half to try out Endowus for the female's own pot. So I've seen some of Hong Kong female ladies, they do have their own personal pot, and as I said, they are sort of looking at ways to see how they can better increase the efficiency of that pot. So very interesting that we see a lot of CIOs of families sitting in the room. Okay. Any other questions? If if not, we actually have, before the Q&A, I wanted to sort of share, we actually have, for those of you guys who dropped your card, we actually have a lucky draw, and I'm very excited to share that we've had a sponsor from Indicate. They recently launched the first rapid test for HPV, and it's very generous for them that they are donating 2 test kits as part of the lucky draw, and they've also offered a discount code if anyone's interested. As females, we all know periodically we have to do the female health check, and I think Indicate's new product is very handy in a way. You don't have to go schedule an appointment to gyno. You can kind of DIY on your own. If there's sort of this indication, then you can go seek out for further help. So maybe Taki, I will do the lucky draw for the 2. Our first winner, it's from Fitch Ratings, Ophelia. All right, okay, baby, you can come up. For those of you guys who've been to Endowus events, we always end with a QR code, cannot end with our QR code. So if you're interested in Endowus, scan the QR code, because International Women's Day is on the 8th of March. We have a special offer. If you sign up before 10th of March, by the weekend, you can get 388 Hong Kong dollars off Endowus fees on our platform. Please check us out, give us feedback. And as Jennifer mentioned, we'll continue our series. And in fact, our next event will be with CFA later in the month. I'll keep you guys posted. But thank you everyone for coming. We'll break for networking. We have some small canapes, so stick around. Let's give our panelists a round of applause. I learned a lot.